What's going on, guys? Just throwing together a quick update video for the weekend. Pretty much got what we're looking for today. Red on AMC. It's what we want. It's what I want. I want to just rip the fucking band-aid off, get the downside out of the way. Another 40 or 50 cents to the downside to go. SPY, another boring day. Let's just jump into it, starting with the macro. Descending broadening wedge for a year. Breakout, retest twice, confirm the retest, bounce off, reclaim the ascending triangle. Sideways here towards the end of it. Breakout, gap up from the breakout, and then upside to 444. Pretty much double top 444 and have seen downside since. Day 60 in a row, closing over the 200 EMA. Golden cross on the daily, all of which is extremely bullish. SPY is going to new highs sometime in the near future. Cooling off right now from that run that we saw to 444. Not a big deal, still very bullish here. Short term, potentially bearish. We can get into that now. I mentioned multiple times this move is completely symmetrical, perfectly symmetrical. Touch points are perfect. I'm not going to bother going through it. But from the rejection off of 438 here, when we retraced and broke through, I said the next price target we could be looking for is 450. It is possible that 444 would have been the symmetrical equivalent to 450. And then we would get that pullback from 450. We were expecting a pullback to 438 to establish support there. It's possible 444 was that equivalent of 450 as far as the symmetry goes, and then now we could be expecting a pullback to 429, 430 to establish support there before moving higher. It's also possible that we just recover here and then go straight to 450. Short term, I'm not really leaning bullish nor bearish. I'm just going to let it play out. I'm not going to be hopping into contracts on either side right now because I don't like the indecision here. We are clearly in a downtrend. It's just how long does this downtrend go for? It could just stop here, could go to 429, or we could just turn around here. So I'm not going to even bother with that. On the short term, macro outlook, very bullish on SPY, going to new highs sometime in the relatively near future. So that being said, the uptrend on SPY, once again, here would be the apex of the ascending triangle here, where you break out, retest, and you form this bull trend to the upside from this breakout of the triangle. Found upside, holding support on this trend, upside all the way to 444, pretty much get a double top, come down, break below the bull trend, and now we have this descending channel. It's possible we break this to the upside now. It's possible we ride this channel down to 430, this white dotted line here, where I would expect to find a bounce, potentially form some support here at 429, 430, and then move higher from there. So that's pretty much it for SPY. Now jumping into AMC, this would be the alternative macro perspective that I showed yesterday. I also showed it a month ago. Said it was unlikely, but it looks like this is what we're going to get now. It's perfectly fine. We're still at the end. We're at the finish line. There's really not much more to play out. From either perspective, my original macro or this one. This one's very similar to the original, with one slight difference being that we're looking at this from 2017 rather than just looking here. The movement here pretty much matches up perfectly too, but I mean that's expected as fractals repeat themselves over and over again. But here we are with the alternative macro, and it looks like we're coming back down to 3.5, 3.6 relatively soon. So 2017, you get this descending trend line here from the highs here. This runs all the way pretty much back to IPO. Have this descending trend line. Starting in the green box where you have this W, you have the same exact thing here. Where we get the downtrend from the flag here, the breakdown in the flag. We have this green box here, which is the W, it comes back up. None of these touch points touch the trend line, by the way. I didn't mention that in the last video. None of them do over here. So there's the green, here's the green. The red, more or less a cup, back up to the top, same thing here. And then the blue, come down, bounce up, come down, you curl up towards the end of it, come down, bounce up, come down, curl up towards the end of it, before dropping down to this flat portion that I was talking about all my last video. And with this perspective, we would have just hit our third peak of the tri-peak, which would be the equivalent of this, and heading back down to the lower low, and the quote-unquote lower low. And it looks like that's what we're going to get now. So I'm leaning very heavily towards this macro. Showing it again here, except this time I took the boxes, the colored boxes, off the flat portion. I think this makes it look a little bit more clear. Same thing with the green, red, and blue, and then I have a vertical line here where you get the drop, the break here, that brings you down to the flat portion. And I have the exact same thing over here. So I think this makes it look very clear, where once you get that break, you have 3 touches on the bottom, 1, 2, and then 3 would be the lower low. Same thing over here, 1, 2, and then now we're looking for the lower low. Once we hit that lower low, we should form an uptrend, and that uptrend should take us to the squeeze. So that's what we're looking for now, is that lower low, 3.5 to 3.6 range. Looks very good. So I showed this yesterday as well. This would be the same macro I just showed you, just with some lines now. So from 2017, the green, red, and blue boxes, same as here, descending the entire time. 1, 2, 3, 4, 5, 6 takes you to the end of the blue. 1, 2, 3, 4, 5, 6 takes you to the end of the blue. And then from there, you drop down to the flat portion where you get 3 touches on the bottom. After that third touch, you form an uptrend and takes you to the squeeze. So from the 6th point here, come down, first bottom, second bottom, and now we're looking for the third bottom, which theoretically should be slightly lower than the April knife that we saw here. Should take us to 3.5 to 3.6 range, somewhere slightly lower than that. Doesn't have to be, but I'm imagining that it would be slightly lower. And that's what we're looking for, is that lower low. Now we're waiting for the bottom once again to come back down to this horizontal line here, the green line that I have here, looking for that third bottom. So this looks very good. Either perspective, my original macro or this one, we are in this flat portion. On both perspectives, we are in the flat portion, and in both perspectives, we're in this last iteration here, this W here, which is a very symmetrical move. Just with this tri-peak in the middle, that would be the middle of the move, and then you come down, and then you're coming up on the other side. It's a W, more or less a W with a tri-peak in the middle. That's where we would be in either perspective. My original macro or this one, we would be in that final iteration here, where we would be getting this W. So there would be your tri-peak, and now we'd be coming back down to the right leg of the W. From there, you form the uptrend, and from there we squeeze. When we do get that lower low, or the bottom here, and we form that uptrend, I'll start talking about the Fibonacci extensions. We'll get into price targets and all of that, and what we can expect. For now, I'm just going to leave it as is and wait for the bottom to be in, hoping that we get this done very fast. Jumping into the micro now, I showed this yesterday as well, where this would be January 2021 on the left versus the current cycle on the right. And I mentioned we already played out the orange box, more or less a W here. Same thing over here, played this out, a lot tighter range down here. Pretty much the same thing though. And then you come up and you form this U in the purple, same here. And then you get the W here. It is a symmetrical move actually as well. You got a W here with a tri-peak in the middle, lower low on the right leg, and then you squeeze when you come up on the right leg of the W here. So this would have been the first bottom of the W, the tri-peak, which would be the middle of the W, and now we'd be coming down to the right leg of the W, the lower low. More than likely will be a lower low before forming an uptrend here that would take us to the squeeze when we come up on this side of the W and break the triangle. So this looks very good. Touched on this yesterday as well. I have this horizontal line drawn across in white from the second peak of the tri-peak, where you find a bounce to the third peak. So second peak, you come down, find a bounce to the third peak. I have this horizontal line drawn across here, runs right through the. So when you're coming down this blue box, you actually break below this line, you bounce above it, and then you come back below to the first bottom. So same thing over here, where you break below it, come back above it, and then you come back down to the first bottom. It runs right under the purple box here. The U runs right under that. Same on this side. And then into the orange, it runs right across the bottom of the W, where you're getting that chop, and actually right above the gap here. This is a fractal break right here. Same over here. Right above the gap there too. So the micro looks good. Macro looks good. Looks very good. I touched on this in the last video as well, exactly what I just showed you with some date ranges now. So again, on the left is pre-January 2021 squeeze. From the start of this flat portion, this 3 fractal sequence here, the flat portion that took you to the squeeze, from the start of it to the squeeze day was 342 days, almost a year. On this side, from the beginning of it to where we are today, 204 days. So I mentioned yesterday we're actually tracking this faster. That would be the silver lining of this macro perspective, is that we're tracking this faster than the way it played out pre-January 2021. And then I have another date range pulled on the bottom of this one, which would be from the start of it to where we would approximately be coming down on this leg of the W here, marked by this yellow line, which is where we would be right here, 204 days versus 311. Again, we're tracking this faster. So that looks good. We're tracking it faster, which is a good thing. The bottom is almost in. We have another 40 or 50 cents to the downside here. and I'm assuming we're going to get that next week, sometime next week. Maybe it takes all week to get it. Maybe we just get it on Monday. I'm leaning more towards we're going to get a slow bleed, kind of like the way we saw it back here, to that lower low, and then from there we form the uptrend, which would take us to our squeeze. I also mentioned this move is symmetrical, which it is. It's a W with the tri-peak in the middle. The tri-peak would be the middle of the move. So this would be the left leg of the W. This would be the right leg of the W. Pop up here, come down and up. Pop up here, come down and up. And then this would actually be the breakout. And then from there, you gap up and you just get a straight line into your squeeze. So that's what we would be looking for now is we come down here, form an uptrend, probably break in back into the 5 range, reject that, come down one more time, and then we would gap up from there and get the squeeze. So that's what we're going to be looking for. We'll talk about that as it plays out. One other thing I wanted to show on this is the daily of what I just showed you. The blue box is the end of the last iteration, the W with the tri-peak that took you to your squeeze. Has very similar gap movements here. So this would have been the break below that horizontal, the horizontal line I just showed you in one of the other slides, and then you pop above it, and then you come back down below it. You actually have a gap right here, which would be the equivalent to this gap right here, which is where you find your first bottom, and then from there you actually gap up into the tri-peak iteration, which we did here as well. So you gap up here, you play out the tri-peak as we do here, and then once you start coming down from the tri-peak, you have another gap down right here, which would be the equivalent of this here, and then we would be in these candles coming down to the lower low before we form this uptrend here. So that's what we're looking for. Very similar movement here, very similar gap movements here. It looks very good. So that's pretty much it for that. And then just showing more or less what this move would look like. I mentioned that the way it played out in January 2021 was very symmetrical, with the tri-peak being your middle. Right leg of the W, left leg of the W. The right leg is slightly lower. That's what we're looking for. And then you pop up, come down and up, pop up, come down and up, and then from there you gap up and you just get a straight line to the squeeze. So this is just a projection. It doesn't have to be completely accurate, but more or less this is what I'm looking for now, is to finish the downside here back to the 350 to 360 range, forming a slightly lower low than what we saw in April. And then you would form that uptrend here, which would break you out. You retest. This breakout retest is probably going to be somewhere in the $5 range before we gap up to the top of the tri-peak, which again now would actually be $6 to $7, and then that theoretically would be taking us to our squeeze. So this actually would play out as a symmetrical move the way it did in January 2021, where the tri-peak would be your middle here. This would be the left leg of the W. This would be the right leg of the W. More than likely going to be slightly lower, 350, 360-ish. You form an uptrend, pop up here, come down and up, pop up here, come down and up, and then that gap, that macro fractal break to the top of the tri-peak, around $6, $7 from there would take us a straight line into the squeeze. So that's what we're going to be looking for. That is pretty much it for the video. I think I touched on everything for this one. Low of the day on AMC today, $4.01. So 401 was the low of the day. I was just praying, please just fucking break into the threes. Let's just get this over with. Looks like it's going to be a slow bleed. So probably expect that next week it'll be a slow bleed all week. Potentially it's not. Potentially it's fast. I would hope. I mean, that would be ideal if we just get this done in a day or two. But more than likely, we're going to be bleeding, probably forming a bear flag, a reiterating bear flag over and over again, bleeding about 10 cents a day next week, where you come down and then towards the end of the day you would curl up, and then the next day would be the same thing. You come down, end of the day curl up. We've seen AMC do that multiple times. That's just that repeating bear flag, where you're coming down in the morning and then you just form a bottom, and at the end of the day you curl up, and then it's just repeating that over and over again. More than likely, that'll be the way that the rest of this plays out. It'll be probably a slow bleed down to 350, 360, 10, 15 cents a day. More than likely is how this is going to play out, in my opinion, until we find that bottom where we should have a reaction off of that, where you come back down, and then you would form this uptrend. That's what we're going to be looking for. So I'm not sure how, if I'm going to be doing update videos every day next week. I just told you what I'm looking for, what I'm expecting. So More than likely, we're going to be bleeding slow next week. Maybe I'll do a video Monday, Wednesday, Friday, unless there's something that I think is urgent or important to touch on. More than likely, I'll probably be making 2 or 3 videos next week. Just because, you know, we're just waiting for the bottom to be in now, and it's more than likely going to be slow. So I'm not going to be making an update video every day. Oh yeah, we're down 10 cents today. Still, we're looking for 350, 360. Like nothing has changed type thing. So that's pretty much it for the video. I hope everyone has a good weekend. And that's pretty much it. Yeah, next week let's just get this shit out the way. Let's just get this bottom next week, and then we could talk about the uptrend and the potential price targets for the squeeze, the exciting stuff. So that's pretty much it. I'll catch you guys in the next one.